What's up, everyone? Welcome back to Bull Mind Academy, the place where we break down markets with clarity, confidence, and the mindset of a true bull. Today, I am bringing you something big, our final financial market analysis before the next major cycle begins. We're going to look at what's really happening behind the charts, whether a new bull market is forming, what major indicators are telling us, and what smart investors need to focus on right now. This video is educational, not financial advice, but it will give you the knowledge and mindset to navigate the next phase of the market. Let's dive in. For months, investors have been asking the same question. Is this the start of a new bull market? Or just another fake rally? Well, today we're going to break it down using data, market psychology, and historical patterns. By the end of this video, you'll have a clear, big picture view of where the market may be heading and how to think like a bull, even in times of uncertainty. Let's get started. Before a bull market begins, there is always a reset. Over the past year, we've seen high inflation cooling, interest rates leveling out, volatility dropping, corporate earnings stabilizing, and a massive rotation between sectors. This is exactly what happens during the late stages of a market bottom. Historically, bull markets don't begin with fireworks. They begin with confusion, fear, and doubt, the exact emotions many investors feel right now. If you feel uncertain, congratulations. That's what market turning points feel like. Now, let's talk about the forces pushing this market upward. First, interest rates are stabilizing. Markets crave stability. When borrowing costs stop rising, companies can finally plan for growth again. Second, tech innovation is surging. AI, robotics, semiconductors, automation, these sectors are driving productivity faster than ever. Historically, major breakthroughs often lead to long bull cycles. Third, corporate earnings are rebounding. Companies are beating expectations again. Not dramatically, but consistently. And consistency is the foundation of bull markets. Fourth, retail investors are returning. The crowd that left during volatility is slowly coming back. Retail participation typically rises early in a bull market, not at the end of one. And finally, global growth sectors are turning up. From energy to industrials to emerging markets, a global synchronized recovery is forming. Put these together, and the foundation starts looking very familiar. It looks like the beginning of something big. Markets don't move on numbers alone. They move on belief, emotion, and expectation. Here's what we're seeing right now. Fear is dropping, optimism is rising, cash on the sidelines is enormous, and investors are slowly taking risks again. And historically, a bull market often begins when the news is mixed, investors are cautious, and people still doubt the rally. Why? Because bull markets are built on surprise upside, not certainty. Right now, the market is doing exactly that, climbing in the face of doubt. Every bull market has leaders, and identifying them helps you understand the bigger cycle. First, technology, which includes AI, semiconductors, and automation. Innovation accelerates early bull cycles. Second, industrial and infrastructure. When the economy recovers, building begins again. Third, defense and cybersecurity. Uncertainty boosts these sectors even in bull markets. Fourth, energy and clean tech. As countries modernize, energy demand shifts and grows. And fifth, consumer discretionary and e-commerce. When confidence rises, people spend more. These leaders tell us one thing: money is flowing back into growth. That is a classic early bull signal. We're not just watching the US, a true bull market is global. Here's what's happening worldwide. Emerging markets are bouncing back. Supply chains are normalizing. Technology adoption is exploding, global inflation is cooling, and new industries are rising in Asia and Africa. When multiple regions recover at the same time, historically, bull markets last longer and climb higher. A balanced analysis means looking at risks too. Potential obstacles include a surprise spike in inflation, geopolitical tensions, a decline in corporate profits, policy mistakes, or sudden liquidity shortages. No bull market moves in a straight line. There will be corrections, pullbacks, and scary headlines. That's normal, that's healthy, and that's part of the journey. So is this a bull market? Here's the truth. We cannot predict markets with certainty, but we can identify patterns and probabilities. And right now, momentum is improving, fundamentals look stronger, innovation is accelerating, fear is fading, and money is rotating into risk assets. All signs point toward the early stages of a new bull cycle, or at the very least a strong multi-year recovery phase. The smart approach? Stay informed, stay disciplined, stay diversified, and always stay long-term focused. If you found this analysis valuable, hit that like button. It helps this channel grow. Subscribe to BullMind Academy for weekly deep dives on market trends, risk management, portfolio building, and investor psychology. And comment below. Do you think a new bull market is starting? Yes or no? Your perspective could appear in our next video. Thanks for watching. Stay focused, stay disciplined, and as always, stay bullish. See you in the next one.